Right, top trades. Let's go and have a look at a reversal entry. This is something in the S&P. This is the very first move up. So from that pit open, we open down in the 40s. A little bit of a chop around in the low 40s. We then get up towards 50 and then crucially we break 57. That then creates the bigger move up. There's your 57 level. You can see where we put some volume in just before the break. Then a surge higher. Now, this surge higher gets you to this little low here, that's 76, just below the key 81 level. We could see a reaction from here. And this is my point on, if you're trying to play reversals by picking levels, well, yes, you could sell 76, but you could also sell 81. So now you've got yourself a 5-handle range to sell, and it could still go through there and stop you out. Being a significant level, that you're going to need a stop of 3-4 handles at least here. So if you sell 76, you could end up with a stop of nearly 10 handles if you're trying to pick the high. More what you want to be looking for is where do you enter it after having been shown the top and also shown that there are sellers in this market. 72 is the place you want to be doing it. Now from a candlestick, well, that looks the middle of nowhere. It's the middle of 2 candles. Nothing to do there. Bring a ladder up and you'll see where that opportunity lies. So, there we go. We'll just get this to start. Right, so this is the move back up. S&P currently trading at 70. So this is the beginning of this phase up here. So we're just trading up. Market getting chased higher, trades into 71, little back off towards 70. Up towards 72.5. And we see here now, each time it trades to 73, 72.5, quite quick selling there. 900 traded twice at 72.5, 72.75. Back again below 72.5. And again, trades there, it gets stuck. So we've seen that someone was trying to sell there. And again, each time it pushes up, someone comes in and sells. They break that selling, market keeps on going for a little bit. It's now up to 74, little spike towards 75. So this is now up to that level that we're looking for. And in fact, we don't actually reach 76, so you don't get the chance to sell it. Now we drop back down. Now the selling comes back in at 72.5. This is your chance then to sell. We see as soon as it gets through there, anything that comes back, that same selling that was there on the way up comes straight back. So we now had a flick up to 75, drop back, 72.5's holding. That's where you can get your entry. This is what then helps the move down. Rather than trying to sell it and guess a high, you've now got in at a point where yes, you've still got a stop above the high. So you've still got maybe a 3-4 handle stop. But at least now you've seen that there's a willingness to sell here. The chance of it going back above here is now reasonably low, illustrated by the fact you can't even get filled 72.75. So the point here being that when you're trying to execute a reversal, watching how the move goes up and seeing that someone was willing to sell there, even though they were defeated the first time and we've got to push up, they come straight back in at the same price. When they come back in at that same price, that's an indication there's still a willingness to sell. I mentioned this at the in the mentor session, but there's an acceptance that you're not going to get one price that's going to stop the market. So if you are a seller, you might try and get some business done at 72.5. When it jumps through, there's a chance to sell some more at higher prices. Still with the idea that 72.5 is a good price to sell. As soon as it comes back, there's your execution to get short. Then it's a case of, and on a trade like this, I think 58 is perhaps a reasonable target to go back to, which is just down here. We achieved that in around about 4 minutes. So you've managed to get yourself onto a 14 handle move, which in this case showed you a full half a tick of risk. Not saying give yourself a half tick stop, but it didn't put you under any pressure. As soon as it dropped back below where someone was previously absorbing, that was the point where the market then starts to drop. That's more the point with entries, particularly in volatility like this. Rather than trying to guess your level and open yourself up to possibly 10 handles of risk, let the market show you the reversal. And in this case, you would have put yourself under around about half a tick's worth of pressure for then this continuation of movement. I'm going to wrap it up there for you guys. Keep your eyes on this type of thing at the moment. Watching the ladder, seeing where things trade at specific points is going to help you out massively in executing reversal strategies as well as continuation moves. Had that gone up to 75, come back to 72 and the buying kept on coming in from there, one, you would never get the chance to sell, so the reversal trade isn't there, but two, it gives you the opportunity to buy for the break of 75 and the run up towards 81. I'll wrap it up there for you guys. You can see here that we're now starting to drift down towards 63s, 63.5. This is where it's just going to be a case of maintaining that conviction on the trade, monitoring where it's bouncing to on the way back up, still with your aim of getting down here towards 58 and that high volume at 60. Yes, if you want to come out a little bit early, 63 could be above this low volume area. That's where you would expect a little bit of bounce, but once inside, then we're going to look for the movement through. So just seeing right now, starting to hold that low volume. You see once again, buying 62.5s just here. It's struggling a little bit. If you wanted to come out early, that's where it is. But unless it's really starting to progress up above 65, you're still looking really for this continuation down.